I'm thrilled to have you on, but you are Dr. Doom. So tell us, what do you think? Dr. Realist. Well, what's really going to happen next year?
Well, there are some positives. The United States, the United Kingdom are going to grow around 3%. That's the good news about the world economy. But there are some downside risks. I think that the Eurozone is in trouble. The ECB is going to go into sovereign quantitative easing, but it's going to be too little too late. There's not going to be enough fiscal stimulus in the Eurozone, and therefore the Eurozone is shocked away from recession and deflation. And there are now rising political problems in the Eurozone as well. You have populist parties of the right and left who could come in power next year, for example.
But is any of that new in terms of the Eurozone? It kind of feels like it's been a mess for years, and we've been ignoring it.
We've been ignoring it, but I think the new thing this coming year might be actually the rise of this political risk within the Eurozone. You have for example, in Greece, Syriza could come to power, is this anti-Euro party. In Italy, Renzi is failing, has not done the reform. He might be going away, and somebody else who's more populist could come to power. Le Pen in France is ahead in all the polls. This anti-Euro party in Spain, Podemos, is #1 in the polls. So I think people probably are underestimating how much political risk might lead to, on one side, austerity and reform fatigue in the periphery of the Eurozone and bailout fatigue in the core of the Eurozone, starting with Germany, where there is now an anti-Euro party that has almost 10% of the votes.
And what happens if we see these anti-Euro parties win, get control? What do you think could happen?
Well, the first risk might be the case of Greece. If Syriza comes to power, it's not obvious there is a set of policy that is acceptable to them and is acceptable to the Troika, IMF, ECB, and the European Union. That could be a collision course. Then you have to discuss whether the Germans are going to decide to bail out Greece, and there is a moral hazard problem, or let Greece go, in which case then, if one country leaves the Eurozone, you could have contagion to other parts of the Eurozone.
Do you actually, I mean, I just feel like 3 years ago we were sitting here talking about, is Greece leaving? What about the other peripheral countries? None of that happened. Do you actually believe it's a real risk?
That risk went away for a while for the last couple of years, thanks to the OMT, the ESM, what the ECB has done. But as I pointed out, right now there are elections coming in a number of the Eurozone countries. And now, after 4 years of recession, take unemployment rate at 25% in Spain and in Greece, 50% among the young, those are the places where actually populist parties, in one case of the left, in other cases of the right, could come to power. If that happens, I would say that the tail risk of the Eurozone might increase next year. Yes.
Should that be important to Janet Yellen? Does she need to factor that in terms of decision-making here?
Well, the Fed is saying that they care about growth and inflation in the United States and financial stability. They don't directly care about the rest of the world, but of course the rest of the world affects the United States. If other countries are weak through trade channels, there is a slowdown of U.S. growth. If other countries are weak, the strengthening of the dollar is going to continue, and that's going to imply further weakening of the U.S. economy. So the rest of the world matters for the United States, not directly. The Fed is not going to worry about impacts of, for example, Fed tightening on emerging markets or Europe, but certainly in a world in which everybody is doing additional monetary easing from Asia, starting with Japan, the rest of Asia, soon enough in Europe with the ECB, the Swiss National Bank, the Swedes, the Norwegians, you name it, then all this monetary easing that tries to prevent their currency from strengthening relative to the yen is going to imply strengthening further of the dollar, and at some point too strong of a dollar implies lower growth in the United States, lower inflation, and that's the channel through which the Fed will care. And even the Fed that said if growth and inflation were to surprise on the downside, we could start later and more slowly the policy tightening.
What do you think the timing is on this rate hike? We talk about it around and around. Yeah. What's really going to happen and when?
My best bet would be that it's going to be either June or the beginning of the third quarter.
Is the market ready?
I think the market is expecting something like this, depending on you asking. Some people think about June, July, September. Some people think earlier. Some people think later than that. But I think that the range is between June and September. And they expect that the Fed is going to exit only very slowly and gradually. So I think that the exit from zero policy rates is quite priced in. I mean, if there was a start in April, that would be a surprise, but highly unlikely. If it was beyond September, that would be a surprise, but highly unlikely. So I don't think that what the Fed is going to do is going to be excessively surprising.
Do you think Janet Yellen's doing a good job?
Yeah, she's doing a great job. I mean, she's been actually doing very well. I don't think there's been any significant market hiccups. You know, the Fed has an overall issue of communicating exactly what they're going to do. But, for example, this year people worried that with the beginning of the tapering of QE, long rates will go higher. Instead, they went lower. for lots of good reasons having to do with the world economy. So far we have not seen the repeat of that taper tantrum that occurred. Some people are worried about the rate riot or something like this when they start hiking rates. So far I think that's priced in, unless there is a surprise from the Fed.